Right, so holy shit, guys! So many people joining and leaving. Is there a way for me to, like mute that? Like, I hear so many people whatever. So yeah, back to Bitcoin, right? Let's just kick things off with a little analysis of fuck, man, that noise is so yeah. Back to Bitcoin. So we've had the 9 EMA cross the 18 EMA on the weekly chart, which is not particularly beautiful because previously when we had 9 EMA above the 18 EMA, what we do is we buy the pullbacks, right? Not necessarily to the EMAs itself, but like you could see that it was in a bull trend, and at the moment we've broken down below, which means, well, potentially until the EMAs cross above each other again, I would say that the sentiment is definitely going to be towards the bearish side, and it depends on how things play out. Because if I just go back to Bitcoin USD, don't believe it was Coinbase, Bitstamp. So if you guys remember that motive wave pattern that I drew out yesterday, if this at the moment you can see that we've had a slight deviation already. By right, this impulse wave was supposed to bring us up to somewhere higher than these couple of levels, and the fact that it didn't is, well, it might be slightly concerning. There is also the fact that this if you don't look at this as an ABC correction wave, you can see this as a 1, 2, 3, 4, right? It's the fourth wave, and the fifth wave is potentially somewhere later. And usually the fourth wave tends to it tends to stall around a little bit before moving on to the fifth wave. So at the moment, this pattern is not broken yet, and honestly, I'm hoping that we get this pattern. Otherwise, it's not going to be pretty, because here's the situation right now. Because we have formed a double bottom, on this level right here at 34,800. Right now, they're like the people that bought Bitcoin. Holy shit! I'm gonna settings. All right, settings, notifications, user. Ah, man, that is so helpful. Thank you so much. Oh my god, I still hear it. Fuck. User join, user leave. I've already disabled that. Right, okay, viewer. I disabled that now. Thank you so much. Oh man. Fuck, finally. That sound was ticking me off, man. Yeah, so back to that theory that I was talking about. So if we just go based off of, the fact that we formed this double bottom here, and the fact that, we have not made a confident move, the break, either of these levels right here is slightly concerning. For primarily it's because of this. Anybody that bought Bitcoin like way down here at the moment would have their stops placed right below this level right here, because if you've read through the encyclopedia on how to place a stop loss, let's say you buy here, after you form this higher low, then you place it right down here, right? That's how you move your stop losses. So at the moment, you can say that, there's a lot of liquidity at this level right now, because everyone's placing their, like, heck, even if somebody buys here, right? Or somebody buys here, or somebody buys here, their stop losses would all be at this level right here, which, if you know anything about how banks trade or like institutions, you know that potentially we might be going down for a stop hunt, and if everyone gets stopped out at the same time, I highly expect us to come back down to 31k to retest the range lows, which is why preferably within the next over here we had a just a 1.5 day consolidation, and so far we've already, hopefully I want to see like a pump right by tomorrow. At the moment it's Sunday, preferably right before, at least I hope the daily candle close that we get today is going to be a nice little pump. Otherwise, we are going to exit our Bitcoin 36.5k long, because chances are, if we are showing weakness around here, then just based off of what I can see from the chart, like if I strip off everything, oh wait, no, that's not everything. If I strip off everything, what would, it's just a lot of liquidity around here. It's the institutions are going to get involved. Trust me when I say they're going to dump the price, right, just to stop everyone out. And we're probably going to get a wick down to 31k if that happens. And if we still have, this is definitely going to be another zone of liquidity as well, because like the lows, right, people aren't expecting it to drop below that level. If we do fall below 31k, then there's going to be like a mass liquidation event, right? Everyone's sell stops are going to be triggered, and it will potentially bring us down to 28.5k, which is previously where I set a Bitcoin limit order of a day. And it ties into something else as well. If we just bring back the indicators, let's go back to Bybit. It goes back to like what I was talking about before about the 9 and 18 EMAs, because the 9 has, broken down right now, it's like it's clear as day that the trend has shifted, from, bullish sentiment to bearish sentiment, which means at the very least, I would say at least for a couple of weeks, maybe 3 weeks, hopefully not more than a month. It all depends on whether or not we can break the 40k, 41k level. If we do, it's gonna be it's gonna be nice, and this would invalidate everything that I've been saying. But if we don't, then what we're gonna be doing is actually looking for shorts. And if we come back down to the 4-hourly level, what I would preferably be doing is Kyle, it was there until it was there back here, right, back like a week ago, 10 days ago, and then we saw this pump, and I sort of removed it for the moment. I will reevaluate every single day as it goes on, so don't worry too much about it. So that means once you get this weekly 9 and 18 EMA crossover, potentially you're going to want to look for shorting opportunities. And the way you do that is, the calls that I'm going to be making like in the next few days is probably going to make use of order blocks. If you didn't join me at the stream that I did, I believe 2-3 days ago, that's when I talked about order blocks. And in a moment, just to draw it out clear for you guys, just to explain very simply what an order block is in a general downtrend, you want to look for a sudden move upwards, right? So this whole part right here, you can see like downtrend, right? I'm sure you would agree. And you want to look for these sudden moves upwards during a downtrend. Like this is definitely a sudden move. This is definitely a sudden move. And usually what this signifies is institutions. This is institutions at work here, because retail, there's no way retail would be able to, push the price up of something like that heavily. So, and then once you identify, times when you have this kind of massive pump, then you want to look for the down candle, right? The bearish candle that precedes it. So, for example, during this up move right here, the last down candle that started this all was here, or was this candle right here, right? If I just, was this candle right here. Can you see that, right? This bear candle right here, and then boom. So this would be your order block, and you're going to want to mark down the close and the open. The open and the close, basically the highs and lows, and that's going to be your order block. And as you can see, the price actually came back down, right down to this exact level right here. And if you want another example of how I made use of this, this was the exact concept that I was using when I caught the pancake. I called it at 15.8. Granted, back then my theory of order blocks has not been as refined yet, but usually what you do with order blocks is you enter in at the open and you exit at the close, and that's how you you enter at a high and you exit at the close, which means this would have been your stop loss and you would have been stopped at. But every situation is different. In this case, the fact that I moved the stop loss down was brilliant. And basically what I'm trying to get at is order blocks are a really good way for you to snipe entries. So notice we had a sudden pump upwards. Right, in a general downtrend, we had a sudden pump upwards, and so you look for the last bear candle, and that's going to be your order block. Look at this, came exactly right down here and bounced. Now, once I get a better understanding of this, I'm going to be making a video, detailing all this. But for now, all you need to know is this is how institutions trade, because they're not looking to buy pancake over here. They want to buy low and they want to sell high. They're not going to be looking at something like the 15-minute chart and be like, it's a pullback, right? Pullback, let's buy. No, because they have such large amounts of money, they are going to want to go into areas of liquidity. It's how I would like to call it. So the way these order blocks work is, if you just take a look right here, if assuming that you got into pancake right at any point. Let's say you got into pancake right here on this candle, on this pump candle right here. Where would you have set your stop loss? Possibly down here, and possibly right below this swing low. If you set it here, you would have been safe. But right here, this stop loss, you would have been safe. But imagine if you set it right at the right at this swing low. Then that means that other people might be setting their stop loss right there as well, which means there is a lot of liquidity in this area. Which means if an institution were to place an order for 500 million, let's say, then probably not going to be that big. But institutional money, right? They have a lot of money to play with. So if they place an order at, somewhere like over here, there wouldn't be enough liquidity to fill their orders, which means that, they potentially, like, their orders are literally going to be filled like in a range of like a few percentage points, simply because like their order is so large. So what they want to do, they want to come down to an area where there's a lot of liquidity, right? Once everyone gets stopped out, that means their orders can be filled, and you can move higher. That's like the basic concept of order blocks and why you should be paying attention to them. Now, I don't have a thorough enough understanding of it yet, but we'll continue to read books on this. And once I do like sufficient back testing, then I'm definitely going to make a video about it just for you guys. But now, what you want to understand, right, based on what I have learned over the last few days, there is a lot of liquidity right below this level right here. I'm sure you guys would agree. If you're an institution and you wanted to buy like $1 billion worth of Bitcoin right now, where would you buy it? Right here, potentially right here, right? You could call this an order block. Right, this is for sure an order block right here, this level. This is an order block right here, right? The last down candle before a sudden move upwards. This is your order block, which means the way, like, forget the naming, right? All you have to understand is if you read that thing in the encyclopedia about how to move your stop losses, like you move it to, the next high low, right? So let's say you bought Bitcoin somewhere around here, and then you come down to form a higher low before moving up, then this is where your stop loss would be. And even for people who, let's say, they bought like anywhere before this level, right? If people bought anywhere below this level, either their stop loss is going to be here, or it's going to be here, right? It's just two places for their stops to be. So with this knowledge in mind, let me just move that a little bit. Yeah. So with this knowledge in mind, that the next, the next couple of points of interest is going to be right here and right below here. And chances are, if we break below this level right here, 34.8, we're not going to just stop here and, bounce, because where is the next area of liquidity? Over here, you have like an imbalance, right? There's not much price action that happened, in between these two levels, which means there's an imbalance there. And, if I just bring up VPVR, watch. And mind you, I didn't check the VPVR before I did that analysis. I only brought the VPVR up now. And you can see, boom, you've got imbalance there, which means if price breaks below 34.8, you're going to shoot right through. And the next area of interest is going to be this order block right here. And you break below that order block, then, you get the point. So here's what I'm looking out for, based on this understanding, right? I guess I'll seriously make a video on this, right? This live stream is just a primer on, how to think more like institutions, I guess. Because after this recent Bitcoin Wyckoff distribution bullshit, it really got me thinking. It really got me thinking into like how institutions trade and like what we should be looking for, because there's a saying, you follow the money. The money is with the institutions, right? They're the ones who are playing with multiple hundreds of millions. So you follow what the money is doing. And if you can understand what the institutions are doing, then I would say that your chances of success are gonna significantly improve. So in this case right now, preferably within the next few hours. But let's just take it easy. Let's be lenient. Let's say we allow Bitcoin about 24 hours to about 36 hours, right? About 36 hours. So right about here, 22nd of June. Yeah, let's just give it 2 days. If it doesn't pump from here on out, then it's going to be dangerous, because area of liquidity is over here. And in terms of sell stops, right? If you were going buy stops, sorry. If you were going short, then let me just color code this so that you guys can understand this better. Actually, these should be the blue lines, and fuck it, whatever. So this is going to be where, if you went short here, and if you just take a look at Bitcoin USD shorts, a lot of people went short. Their stop losses would be right here, okay? Does that make sense? Because, this is your lower low. So if you just take the concept that you learned from the encyclopedia, this is where your stop loss would be. So this is the area of interest, okay? Right below this level and right above this level. That is the point of interest. And if I bring up the VPVR, boom, right? Lots of orders right here and lots of orders right here. Like, it makes sense. The more you know, the more it makes sense. And right now I'm bringing up this is another indicator that I'm trying to familiarize myself with. This is the order flow. At the moment, as of right now, I do not have a good enough understanding. So let's not get into that. But yeah, this is the new concept that I'm learning right now. In a way, you guys can start to see the charts this way. It will be very beneficial to your trading. It's just, but yeah, just sharing with you, stuff that I've been learning, over the last few days. And, I always like to have this saying, right? When the markets are boring, right? When you see Bitcoin dominance, absolutely pumping, when you see the DXY pumping, and when you see I believe the NASDAQ, or I forgot which stock market was it, but it was dumping, and, whatever. When you determine that market conditions aren't suitable for trading, it's really important that, you can identify when is a good time to be trading and when isn't a good time to be trading. Because, like, I think Richard says this a lot. The more times you trade, the more times that you hop into a trade, that's more chances that you have of getting wrecked, which is honestly true, right? And it goes back to what I always say, what I've been preaching for like over a month now. And, I mentioned this in the encyclopedia as well. He will win who knows when to fight and when not to fight. When it is not the time to fight, what you do is, you invest in your education. Watch the videos that I've posted. Those are, not to sound biased, but I would say those are decent. Test out strategies, right? Richard, you try to understand Richard's charts, right? He, like me and him, we have totally different trading styles. He's more of a aggressive trader, I would say. But even he, right? Even like we discussed this as well. Even though he's posting a lot of charts, he's actually been trading way less, right? And Richard's someone who's been doing this for, I think, like 2 decades for now. And even someone, and by the way, he has way more experience than me. So even if someone like him is, he identifies the market conditions and it takes it easy, right? It's not the time to be like overly aggressive right now. So yeah, I know it's been really boring, right? It's already a month since we've been in this range. I know it's not fun, but there is a time to make money and there is a time to lose money. Right now, if you try to trade this, you're likely going to lose money. And, when we start trending again, right, it doesn't matter if it's up or down, right? Once we have, a clear trend, we're going to be able to make money, right? And I'm talking like absurd amount of money. But what's important is that during, uncertain market conditions like this, you do not be, overly, zealous. And, you're just going to imagine if you lose all your capital around this range. And by the time that, it's time to go balls to the walls again, when the time comes to make, legendary gains, you don't have any capital to make those gains. That would be such a pity, wouldn't it? And, I've had a couple of people like come and DM me saying that, they haven't been making money, right? And, I made a video about this like before, which is if you're not making money right now, it's perfectly fucking normal, right? Even for me, over the last month, throughout the whole of last month, I've taken at most 15 to 20 trades. Out of those 15 to 20 trades, about 15 to 16 of them came back down to stop me out at break even. And that's fine. And I've only had about 3 or 4 that ran. Filecoin was one of them. That was a 40% gain. Solana, I believe, was a 30% gain for me. And recently, that 1K to 10K trade where we traded Dent for, I believe, 20%. Like, during times like this, it's perfectly fine. Like, if you guys are not making money, trust me, most of my trades are getting stopped out at break even as well. Simply because nothing's moving well, okay? Remember what I said? When it's trending, it's really easy to make money. When it's ranging, it's very easy to not make money. And it's even easier for you to lose your money as well. So capital preservation during times like this is key. And if you get stopped at break even, right? If you remember that example that I gave with Pancake, we sniped that level perfectly. It went up by 7% and it came back down to stop us at break even. It's normal, okay, during market conditions like this. So if you're not making money, like I'm not speaking from the perspective of, hey, you guys are my Discord group, so I need to keep you guys optimistic. Honestly, I'm not doing that. Just, it's not just me, right? Richard feels the same, right? He thinks the same. He's been through this. When it's ranging, it's really boring, to say the least. And right now, right now I'm doing like pretty much like, I'll do more of those like market scans and I'll be posting way more educational videos or live streams. And right now, Richard and Blobbies, they're discussing a lot about like Bollinger Bands. It's good to research some strategies that you want to try out. And right now is the time to be learning, right? To take a step back. And if we get breakouts, by the way, right, there's a reason why I've only been calling breakouts and limit orders, because during times like this, there's only 2 kinds of trades that you can take. One of them is a breakout where, if you get volume spike, right, it doesn't matter if, market conditions are bad. As long as you get enough volume, then people are going to hop onto that, right? Just to give you an example, right? Ava, we we traded this. I mean, I got out with like 15%, but some people got out with 20 to 30%. And it goes to show like my theory, right? As long as there's volume over here, as long as there's volume, anything can move, even during subpar market conditions. All you need to do is, set your stop losses to break even more aggressively, and you'll be fine. And as for limits, well, I'm sure some of you have been wondering why my limit orders have been so conservative. And honestly, it is because of this, right? If Bitcoin dumps, right, because it goes to hunt out, it goes to stop out all this liquidity, you are 100% going to see Bitcoin dominance. Yeah, see, it's already pumping. And if Bitcoin takes a dump, then we're going to get to 50 like way quicker. And honestly, I wish we could get there. This is going to be really strong resistance for Bitcoin dominance. And if we get rejected off of there, and at the same time, Bitcoin is able to reclaim a few levels, like key levels, then such as breaking out of this range, then confidently, right, I'm going to tell you, all right, bull market's back and we're going to be way more aggressive. But for now, for real, it's really like, it's really not about always being in a trade. Like even I haven't been trading much, and even Richard hasn't been trading much. It speaks volumes on what you're supposed to be doing. Like, in fact, if I could illustrate this a little bit clearer, you can just think of trading as the way I explain it is you need to understand when to go balls to the walls and when not to go balls to the walls. That also means that so if we go back to this Filecoin pump, you can see that out of this 30-day range, right? You can see that we're ranging right now. Out of this 30-day range, there was only about there was really only about 3 to 4 days where Filecoin was moving like really well, and if you were shorting, then you can count this part in as well. So there was only about 8 days in Filecoin's entire 30-day range where price was moving very confidently, which means that imagine if you did not take any single trade right here. Imagine or you short this for 13%, or you short this for what 18%. Right, so that's a total of like 30% gains. But doing so would require your attention at the charts pretty constantly, because we're in a range, so it's dangerous, right? You might get stopped out any time. There is no direction yet. But imagine if you only spent 1 day trading, you would have made more, right? It goes back to filtering out your trades, right? 80-20 rule. In the last 30 days, there was probably only about 4 to 5 days where altcoins were moving really well. And if you stayed out of the markets during the entire 25 days, and you only entered the market in about 5 days, you would have still made way more than if you were trying to trade this chop right here. If that makes sense. Like most of the results are made when on the good days. So it's really important to take a step back, be patient. And honestly, I'm seriously not saying this because like I have like a group or whatever. Like even if you leave this group after this or whatever, just remember this, right? If you remember this one concept, it will save you a lot of losses in the future, right? It will actually ensure that you're going to be like way more successful than most people. It's just knowing when to trade and when to take a step back, and we'll take a few steps back. Now, that was admittedly a slightly long rant, but yeah, I know I sound like a broken record here, but seriously, you're trying to take other people's money in this market. There's people out here who have been doing this for years, right? Like Richard, like me, like, I don't know. There's a lot of people, there's institutions that have been doing this for decades. And if this is your first month, maybe your first 3 months in crypto, heck, if you didn't have any like proper how do I say guidance before you join this group, and you're expecting to come in here straight away and taking other people's money, you gotta be a bit more realistic, right? Backtesting is going to be important. Testing out your strategies is going to be important, right? You're going to have to put in the work. When I first started out, it took me hundreds of hours before I was able to, of education, before I was able to be profitable. And I'm not saying you're going to need to take that long, because, you are already speeding up that process by joining this group and, taking in the information that, I have compiled over the years. But it doesn't change the fact that, you're trying to take money away from people who have been doing this for way longer than you have. So seriously, I'm not saying this to sell you guys something, but it's important to trust the process and, continue working on your craft. And I'll be giving you guys the trade setups that are high probability. I'll continue to do that, so you can still take those. So yeah, that's like the end of my rant. Is there any questions that you guys want to ask? Anything that you're unsure of, when it comes to trading, strategies, any issues that you're facing. It's a Q&A live stream. I'll be here to help you guys out. I post your questions in like beginner. Would you guys want to talk to me instead, instead of chatting? Is there anyone who would be up to that? We could always move back to the JS bar, that's something that you guys want. So the way that I find snipes, is a combination of a few things. So, I guess a good example to start off with is H bar, because I sniped the exact bottom on H bar, way back before you guys joined the group. I think one of my first calls ever on. No, was it on Twitter? No, I'm not sure. But this call was made back in April, if I'm not mistaken. Yeah, back in April. So most of you weren't here yet. In fact, I think the only two people in this entire group was at the moment, right, was Boyleman and Yorkshire Boy. Like those two joined. Those two were the first ones. So the way that I find sniper entries, for starters, I'm gonna need to bring up the EMAs. So, was I sniping it on the 4 hour? Was I doing it on the daily? Yeah, I don't think I was doing it with the EMAs on this one. But yeah, let's start off with using EMAs as a way to snipe entries. Right, that's method number one, basically. So when price is really far away from the EM, have I talked about this in the EMA video that I made? Yeah, Lemon Day is an OG. Like it was, I don't know if you remember that Lemon Day, but the price back then for H bar, it was literally like all the way up here when I called it at like 0.33 to 0.4, and I set limit long this level, right, when price was over here. And then 3 weeks later I checked and kaboom, 80%, like kaboom. Yeah. Anyways, that's just me pumping my own ego. By the way, for you guys who have watched the EMA masterclass, have I talked about sniping entries using the EMAs? Actually, I'll just repeat it right now then. So the first method is 100% using the EMAs. All right, it doesn't matter if it's, well, for me, I would prefer like using the EMAs on the 4, 8, 12 daily, weekly even, and to a lesser extent the 1 hour. But usually I go for at least 4, 8, 12 D, and anything above 4 hours. Okay, anything above 4 hours is going to be a good place to start by using your EMAs. So first off, when price is above the EMAs and it's really far away from the price, then you're going to want to snipe entries based on the 50, the 100, and the 200 EMA. It doesn't matter if this is the daily chart or the 2-day chart, whatever the case. If I place an order right here at this moment, 0.15, possibly a little bit. Nah, this level doesn't make sense. Yeah, that level doesn't make sense. Wait, no, I'm getting sidetracked here. So use the EMAs. Okay, that's your method number one of sniping entries. When price is far away from the EMAs, you expect a retracement back to, usually I don't use the 50 to snipe. Usually it's more like the 100 or the 200, but expect a retracement back to that level. So that's like your method number one, right? And that only applies if price is way above the EMAs. So what about downtrends? Like if I go into a SafePal, Jesus, chart is messy. So yeah, if we go back to SafePal, right, similar concept applies. You snipe your entries, right? If I were to have said like, I'm going to call the short here, right? If you guys took this, I didn't, but I'm looking back in hindsight right now. If I called that, it would have been bloody brilliant because, we've got confluence from EMA and we have, previous resistance. And honestly, this is an order block right here. In a downtrend, right? Generally in a downtrend, you want to look for these sudden spikes. This is what you call a bearish order block. A bullish order block is when in a sudden downtrend, you have a massive spike. This is your bullish order block right here. This is a bullish order block and this is a bearish order block. So this is where the institutions are playing right now. This is an area of liquidity. And look what happened. Price, exactly. Right, exactly. Right, I wasn't discussing this like before, but now that I know this, wow, it opens up so much. And right now, this is an area of liquidity as well, right here. And if you ask why, if you were taking any trades in between this range, where would your stop loss be? Right below here. The more you know. Yeah, Lemon Day. Yes, as he says, most calls looked impossible to fill, but they did. And honestly, to you guys who joined in May-ish, I know you guys haven't seen many sniper entries from me, and that is simply a byproduct of the market being a bitch. When market was trending, holy, sniper entries left and right. So seriously guys, if you are making money, don't be discouraged. I'm not telling you to blame it on the market, but seriously the market's not pretty right now. I should say that. So where was I? Alright, EMAs. So when you get so method number one, EMAs, right? When price is below the EMAs, you want to short at the major moving averages, right? We go to, say, the 4 hourly. In this case, price didn't actually respect the EMAs much on the 4 hourly. So neither did it on the 8 hourly. So it's not a foolproof method, or especially right now, where we are in fuck, there isn't even any EMAs to work with. Yeah, but it's worth a bet, all right? But if you want to be absolutely certain that, it's going to be a sniper entry, you are going to want to look for that EMA right there to either be previous resistance, okay? You're going to want it to be a major level of resistance / support. At the moment, because most charts are underneath the EMAs right now, we are looking for shorts, which means we look for shorts when we have confluence from the EMAs and major levels, as well as order blocks. If you can find order blocks, fucking brilliant. That's going to be a snipe for sure. So if I just try to just come up with a random example, what other coin was I sniping before this? I don't remember. Shit. Oh fuck. Oh shit. I need to go back to my chart calls, but fuck. What other coins? Right, Reef. So okay, no, I didn't really apply the EMAs to this concept, but Rune. Right, Rune. We sniped the exact bottom back then. Not really the exact bottom, but like we went in at 6.6, which is close enough, right? Close enough. So when it comes to sniping entries, I believe I don't remember what level I was using. Wait, basically, yeah. So first step, right? Let's sum it up. First step, try to identify the EMAs. Or you want to always use the EMAs, the 100 or the 200, as a starting point of where you want it to look for. EMAs is going to be your first, how do I put this? It's going to be the first thing that you're going to want to look for areas of value, of potential value, right? And they are not confirmed. Like if you just look at the EMAs, you're going to get wrecked. What you want then, step 2, is to make sure that the EMAs line up with a major area of either resistance or support. So if you guys watched the support and resistance video that I did, then I said the more times a support resistance gets tested, the weaker it becomes. In this case, what I saw back then was this beautiful resistance right here that only got tested pretty much twice. So immediately, right off the bat, I know that the 200 EMA is probably going to get wicked past because the 200 EMA at the time did not line up with any major levels. Back then, I believe I called it when Rune was about here. So back then, the EMAs was here. It did not line up with any major levels, as you can see, right? Does it line up with anything? No, I don't think so. So when the EMAs do not line up with anything, expect it to wick past. And if it does, where is your next area of value? In this case, it will be this resistance that we have not tested for a bloody long time. And now that I understand, now that I have a clearer understanding of why we came back down to exactly this level. Back then, I did not have a clear enough understanding, but now I do. And that's because there's liquidity at this area. There is an imbalance right here. When Rune was all the way up here, right? Let's say you didn't know that the dump was going to happen. Most of the price action was happening at around this range, around this range right here. I'm sure you would agree. And there was an imbalance in price action over here, which means potentially a lot of liquidity stuck there. Okay, that's your first indication. And what if we sweep the liquidity at this level? What's next? There is literally nothing in between these two levels to stop Rune. So immediately, if you get a mass liquidation, you're going to fly straight down to the next area of major. That's what I saw back then. Right? If you go back to active trades, you can see that we entered Rune at 6.6. That is a risk-free trade for now because I already taken out 50% when it was at 13. So step 1, EMAs. Step 2, see if it lines up and identify some major areas of value. Right? Could be resistance, could be support. And step 3, you're going to see if it is an order block. I'm going to be making a video on order blocks, but if you apply these 3 things together, right, it sounds simple. It is, how do I put this? There's a saying, it's simple, but it's not easy, right? It's a 3-step process. It's simple, but it's not easy. You really have to gain, experience, right? You have to be able to, find confluence from, higher time frame, and then you bring it down to a lower time frame, and you want to see how that applies. So does that make sense? By the way, that's a 3-step process. So for example, right now, if I wanted to look for a snipe, then I'll run you through, right, real time. So this is going to be an area value that I'm going to be wanted. This would be my short snipe for sure. We have over here, we have formed a double top, okay? It's not on the same level, but you could still call this a double top because it came up to almost similar levels. 100%, I would try to look for this area as an area value. In fact, I might even go a little bit higher to set my short, but let's just go with this for now because 1, lines up with the 200 EMA on the 4 hourly, and 2, it lines up with an area of liquidity, right? If you were short on Rune, you would be placing your stop loss right here at the moment. That makes sense. This is an area of liquidity that a market is going to hunt soon. In this case, I would not, so this is my area of value, right? This is a potential level of value. But because I know that liquidity is up here and potentially here as well, I am going to actually start my short here. If we get it, brilliant, right? I mean, it's every shot is different, but if we get it, brilliant. Right? I'll start my short about there because I know liquidity up here. If they get stopped out, chances are we're going to wick up to about here, potentially a little bit higher, and then we'll come back down because the market wants to, institutions want to hunt out liquidity. So that's how I would go about it. And at the same time, on the 8 hourly, you can see that even though at the moment this level is not nearly close enough to the 200 EMA, but you have to take into account that EMAs are lagging indicators. They take a bit of time to move. At the moment, you see the 200 EMA is still coming down, which means in a few days' time, potentially when the price reaches here, 200 EMA will be about here. So it's a bit of front running involved and predicting where price is going to go. But if you don't want to complicate things, just short here, or at least set an alert at that level, because this is a very major level. Got liquidity, so potentially you're going to get a wick up before coming back down. So just keep in mind the potential of wicks forming at areas of liquidity. So in real time, that would be where I would be looking to short Rune. At the moment, I won't be, and if I want to be looking for buys, that's a whole different story. For buys, because I don't see any areas of value on the EMAs, right? In this instance, I don't see any EMAs as areas of value, like potential areas of value. So, and at the moment, we are in a downtrend. Usually you don't trade against the trend, but if you just wanted to look for areas where you could buy Rune at a fair price, what I would do then is to bring up the VPVR. I love the VPVR, and you should learn how to use it as well. So actually, before you even bring up the VPVR, you should identify some areas of value first. So you could do that in a few ways, right? You can identify, fib. You could draw a fib level that will work fine as well. And for now, we can see that this level, potential area of value. If I just bring it all the way down, then it wouldn't make much sense anymore, but potentially right there. So that's 2 areas of support. And if I go back to the daily chart, can I identify any order blocks? So at the moment, you could argue that this is an order block. You could argue that this right here is an order block, but let's take it. So this right here would be an order block, and boom, right? If I knew about, and boom, right? If I knew about order blocks back then, I would have actually seen this coming, like right to the area, right to that area. Boom, the power of order blocks, guys. So identify some, areas of value, identify your order blocks and figure out where would make the most sense for price to, find support at the moment, because we are expecting Bitcoin dominance to go to about 50. And previously, when we went from 40 to 50, altcoins literally lost about like half their value. And so, assuming that right now we are at 45 and we go up to 50, it would be safe to assume that altcoins would lose about 25 to 50% of their value yet again, which would definitely immediately, it should invalidate this level at $6. Because if Bitcoin dominance were to go up to 50, no way it's going to just stay here. No way. So immediately, this order block is ruled out. And right now, just to confirm things, you can see that indeed there is, I guess you could argue there's something there, but not really. So if the price does fall below that level, then where do you find support? Okay, potentially you could say 5.7 is support. But honestly, if Bitcoin dominance goes to 50, this won't hold, okay? So then you look for your next area of value, which is 4.5-ish, which I don't know if I called Rune at 4.5 in active trades. I'm going to check. 4.6, because sometimes you want to front run it a bit, because, when things are wicking down hard, if you try to snipe it to the exact value, you might not get it. So it's good to front run it just a little bit, right? So 4.6 is going to be the bottom for Rune, in my belief, because we have volume right underneath this level, and we've got the order block. Okay, there is an imbalance. Like there is liquidity right down here, which means potentially, we're just going to wick down and then come back up. So 4.5 is going to be very close to the bottom, and it all involves, thinking several steps ahead of the market. Like, there's a reason why this group, there's a reason why I'm such a big fan of grand strategy. Not necessarily chess, but, grand strategy. And if you look back at, the great grand strategists of the past, and I'm not calling myself that, don't get me wrong, I'm just sharing a passion. All of them have thought several steps ahead, and they plan for every kind of situation. So if we go bull, what's the key levels to watch out for? If we go bear, what's the key levels to watch out for, and what am I expecting the market to do over the next few days, few weeks, and where is a level that people wouldn't be looking at. Where is a level? Yeah, in fact, you're going to ask yourself, where is a level that, if I were to call that, would be absolutely ridiculous for half the people that sees it? Or probably more than half. I'm sure some of you, when you first joined this group, especially the early adopters, I'm sure some of you might have been laughing at me for calling Rune at 6.6. You know, some of you might have been wondering, like, what the fuck is this guy talking about when he called YFI at 25k? I called YFI at 25k. Boom, boom. When YFI was at fucking 60k, I called YFI at 25k. It's about thinking like several steps ahead, right? What are you expecting, right? Back then, Bitcoin dominance was at 40 over here, which is where, I mean, like, I exited a lot of my old positions when Bitcoin dominance was at 40, and I was discussing it with the private group as well. But the key, right, it comes with experience, but you sort of have to think several steps ahead of what you think the market's going to do, what Bitcoin's going to do, and then you pair that all together with your areas of value. You bring up your VPVR, you bring up your order blocks, you bring up your EMAs, and you deduce the best possible like entry point for all of those. And again, am I saying that it's always going to hit? No, absolutely not. But if it does, you'll get rich. And that's the beauty of sniper entries. If we don't get it, okay, then we just trade with the trend. You know, we find entries after it has bounced and develop a trend. So no FOMO there. But if we do get the sniper entry, fuck. But if we don't, it's going to be an opportunity another day. No FOMO. Absolutely no FOMO. So step 1, EMAs. Step 2, major levels of support and resistance, preferably something that's on the higher time frame. Step 3, order blocks. Step 4, bring up your VPVR to confirm your bias. And step 5, consider multiple possibilities. Consider the issue in multiple angles. So for example, okay, even though over here, this is a strong level of support, right? Strong resistance, you know, strong support, strong resistance. Even though this is the case, because you are expecting Bitcoin dominance to go up to 50, because you are expecting, you know, if we do drop from here, right, it means that Bitcoin has broken through below 34.8k. So if both of those situations apply, you have to think, okay, if Bitcoin breaks below 34.8, where am I expecting it to go? And for me, I'm not expecting it to stop at 33k. Okay, perhaps it will, but I'm not expecting it to. For me, I'm expecting, because it's going to hunt out the liquidity, it's going to drop way below that level, possibly down to 31k. If it drops down to 31k, will Rune find support at 5.9? Possibly. But I would say the chances are closer to this bottom level right here. So, you know, it's all about thinking in probabilities and considering the angle in multiple ways. Does that make sense to you guys? And that's how I trade, by the way. I am not much of a day trader. I am not much of a scalper. Personally, I am too busy to do either of those things, and so I snipe entries. Literally set and forget. If I lose, so what? I get stopped out, I manage my risk. Cool. But if I don't get stopped out, bam. Either way, it's a win-win for me, because either way, I don't have to pay attention to the charts trying to day trade or scalp it, right? I can literally just go to sleep. I could take a vacation if I wanted to, as long as my limits are set. When I come back, if I get stopped out, okay. If it wins, yeah, cool. And that is, again, my style of trading. Now, this style of trading will not fit everyone, which is why it's important that you identify your style of trading and you stick to it. Because I tried scalping, I tried day trading. I can make money from those two, you know, trading styles, but it doesn't, like, honestly, it doesn't fit what I'm looking for. It doesn't fit my personality as well, because I'm kind of a impatient guy. In fact, I'm a very impatient guy. I really do not like to wait for things. I mean, like, it's all about, like, what do you call that? There's a quote by Sun Tzu, and if you guys don't know who Sun Tzu is, one of the greatest strategists to ever have lived. Yeah, he wrote the book The Art of War. If you guys haven't read that, you might want to give it a read. It's a really good entry point into grand strategy. It's a very digestible read. The first time you read it, you feel like you understand what this man is saying, but honestly, you don't. But anyways, one of his favorite quotes is, know yourself, know the enemy, 100 battles, 100 victories. And right now, I want to stress the know thyself part, because the first step before you can even like jump into battle, right? In this case, this is your battlefield, right? Trading. This is your battlefield, and these are the battles that you're fighting. Before you can even jump into the battlefield, you have to first identify yourself. You need to check, you know, is my army mostly cavalry? We are mobile, or are we mostly made of archers? You know, we got siege machines, you know, stuff like that. Are we better off staying put in a certain position, building, you know, barricades and whatever, and defending our position from there? Or are we better going off to, you know, use our cavalry advantage and, you know, doing skirmishes? You know, before you can even develop a battle plan, it makes sense that you first have to understand your army and yourself. Does that make sense? So to translate this back to trading styles, I know that I'm a very impatient person, right? I do not like to waste time on things that I do not see the need to, which means I do not wait in line, right? I'm the kind of person that I wouldn't even go out to get food. I'll just I understand myself, right? So in this case, scalping and day trading is definitely out of the question for me. I'm not going to sit there and look at the chart, for hours to get the optimal entry or exit. Now you can use alerts, right? Alerts will solve most of that, but because I understand myself, I'll actually just set it and forget it. So that's why I developed my trading strategy, my style, to suit me personally as a human. And so you really need to sit down and ask yourself, right? Are you able to make quick decisions on the spot? Are you able to, or are you able to just set an order and wait a few days before you can see results? Or are you the kind that you have to get it now, you have to get the results now, but at the same time you can ensure that you're going to be disciplined with your strategy and you're not going to rush into things. Like, you will wait for the optimal entry, you will give it time to play out, but at the same time, it's all about understanding yourself. For those of you who are still trying to develop your own personality, I guess, like Richard, right? I think Blobbies or Richard was talking about Bollinger Bands, right? Now, am I saying that it doesn't work? Probably not, right? It's just personally, in my experience, using the Bollinger Bands usually requires you to have the time and the attention to sit in front of the chart to identify when the price is crossing into the Bollinger Bands. And of course, alerts solve this. By the way, alerts solve this. You can just set an alert on the Bollinger Band. But at the same time, it's not as set as forget, if you know what I mean. I still day trade time to time, I just set an alert. If price reaches this level, okay, I place the order, I place my take profit and move away. Right? In a way, that's day trading as well. But which makes everything that I said in the last 10 minutes kind of redundant. But yeah. Just a little bit of a rant, that hopefully will help some of you guys out. Does that make sense? And holy fuck, if I find out later on that I wasn't recording the right screen the whole time, I am gonna lose it. There anything else, guys? There isn't. I'm probably gonna end the stream here. What, this one? Mr. D, what, this one? Honestly, if you're wondering about that, then I would say it's already played out, or it's playing out already. It's like, okay, the blue triangles simply indicate that direction is going to change. At the moment, this was up, and after the blue triangle, it went down. So I wouldn't be concerned about it because honestly, it's already played out. Perhaps we are still playing it out, but chances are, no reason for concern. Honestly, this stream went on way longer than I expected. I am fucking thirsty right now. It's good, man. I'll be making future videos about this after I get a even better understanding. For now, I'm basically just new to this whole institutional trading concept of trading. But god damn, has it changed? Has it really changed the perspective for me? Right now, I'm seeing things on the chart that I previously never would have considered before. Luke, I would love to do that, but that wouldn't be that'd be pretty hard for me. My time schedule doesn't really fit America time. I mean, catch the replay though. The replay is pretty good too. You don't have to sit through all the pauses in between. You don't have to sit through all the silences in between. But just based on my daily schedule and what I do, I would love to make a more US friendly time stream, but unfortunately I cannot. I don't see that changing anytime soon as well. I mean, if anything, I could do it more towards like 10 p.m. EST if that helps. Damn, Muffin Man, you are dedicated, man. I'll give that to you. Hey, airdrop. I only did like 3 a.m. streams since the inception of this Discord. What? No, come on, man. I mean, I know the first ever stream that I did back for the early adopters was 3 a.m. But come on, it was just that and like the recent market scan that I was doing. Yeah, I'll be recording these. I mean, I have recorded these and I'll be adding it to trading course. Finally, we're seeing a bit of life come back to Bitcoin. Dude, Luke, honestly, I've been telling you guys to do that for the last few streams. Nobody posted any questions before the stream started. So what the fuck do I do then? That's what I taught you guys to do. Damn, guys, Bitcoin. Oh, finally, there's life coming back to Bitcoin. Nice volume as well. Yeah. So as long as we break through possibly the 36.4k level, then that's going to be a good sign for at least break through the 200 EMA on the 15-minute. It's gonna be a good sign for Bitcoin. Hopefully, we get that. At the moment, it seems like we're getting rejected. There's no volume, but if we do break above the 200 EMA on the 15, that'd be nice. Honestly, that'd be nice. Otherwise, I really see us sweeping the liquidity below this level right here. We'll have to see how it plays out though. Anyways, guys, I think I'm gonna end it here for today. Thanks for coming, like, on a weekend, when you could be, relaxing. Honestly, if you are here right now, you're way ahead of a lot of people right now, and give yourself a pat on the back, I guess. Like, thanks for being here. Airdrop. Yeah, we will rest when we are rich.
Well, yeah.